Hello, friends. Welcome to the Weekend Investing Stock Market Review, weekly review for the week ending 28th of February. So, week which we want to forget very quickly, a month also which we want to forget very quickly, and you will see why in the data sheets. This week, from our research desk, we had these fantastic content pieces. Some of you may have gone through them. I'll not go through the detail, but all these and more are available on the Weekend Investing website, on the Weekend Investing app, and in the daily newsletter that you can get on email. So, do make use of all the content that our team works very hard to prepare and present. The idea being that all our investors should remain up to date in terms of whatever education and the changing marketplace scenario that we are able to demonstrate and you know correlate to the current situations, the behavioral part of investor thought process. Um, do read the disclaimer and please do subscribe to the channel if you haven't so far. The team really looks for motivation and feedback on this front. Nifty is in a complete free fall, if I may say. Till about the beginning of the week, it seemed like Nifty may hold the ground near 22,800, 22,700 that it was, hovering around. But then, suddenly that level has broken and we are hurtling down now, uh, well below 200 DMA, well below 50 DMA. The June low of the election day is still far, which is 21, 300 odd. And if when a market is falling like this, I mean, if you see from 23,800, we've already come down to 22,100, almost 1,700 points without a break, without any counter move. So certainly it is ripe for a counter move, but that's the same was expected earlier as well. So you can't really predict where it happens. This looks like capitulation. Maybe we get another big bar of capitulation down. That is also possible, but we are nearer to some sort of intermediate bottom like this at least, or like this very very soon. It is I think delayed, overly delayed now in this part of the leg of the down move. If you see the longer context, then on Nifty at least, we've not even sort of come back to where we were at the beginning of 2024. So we have had a lost year on Nifty. That's, if you see it from a larger picture perspective, that's what has happened. That 2024 has been a washout, the last 12 months, you can say. But the deeper you go into the market, you find that the gashes are very very deep. It is looks nothing like the Nifty of 0% returns over the last 12 months. So Nifty is on the weekly is and has entered a zone of consolidation that was there from 2024 Feb to May. So I would very strongly expect that this zone will again form some sort of support here. Um, where within this zone is tough to call, but we should find some bottom, at least of intermediate kind of this nature within this zone, and that is the expectation right now. S&P 500, which was falling for the past few sessions, saw a recovery, and net it only went down 0.97% this week. S&P has also sort of flattened out since November. So then the last 3 months, since President Trump was going to come into office and then he came into office, market has stopped moving up. So whatever was discounted of the presidential outcome earlier than the news, the market remains at that level. But at that level, also the market is said to be extremely overvalued from their perspective, their historical valuation perspective, etc. But the flow of money towards the US is so huge that valuation metrics are set to the side. Gold, after a very long time, saw a 1.69% down week in rupee terms. So we were nearly 87,000 on 10 grams, and now we've come to nearly 85,000 this week. So some price correction, profit booking was expected after this run up. I think that if this is a deeper fall that may happen, at worst probably we'll come back to these levels. I think that can be expected, because see, the extent of run has been huge. I mean, we are running since October, November 23, and we've gone almost 60% since then. So some give up of that nature of maybe like a one third retracement would mean that you will come back to about 70,000 somewhere. That is a possibility that we should keep in mind. Dollar index is not bowing down. Dollar index is up 0.87% again this week. So if dollar index goes up, there's more pressure for foreign funds to go back to the US as US yields improve and US investments become more attractive. So this, we are not able to get out of this dollar strength cycle, even though the new government in US wants dollar to weaken, but nobody knows how that will be achieved. In the benchmark indices, a bloody weak 5.7% on small caps. Nifty Next 50 behaving like small caps. This is a very strange phenomena that has happened this year. Nifty mid cap minus 5%. So there's no difference virtually between mid caps or Nifty Next 50 large caps and Nifty small cap. Everything is getting demolished pretty much the same way. Only Nifty is down by 3%. Nifty 500 is down by 3.9%. In the last 1 month, we've now lost 8.5% on small caps, 6.5 and 6.3% on mid ends. Nifty Next 50 and Nifty 50 has been curtailed to 3.6%. Nifty 500 is down 5%. And if I were to look, let's say 1 year back, then mid caps is now zero, although mid cap stocks are much lower than 1 year back, most of them. Uh, Nifty 500 is even, Nifty 50 is 0.7%. So, and if small caps are down 7%. So, if you see it in this context, and if you had, let's say, Nifty and a Nifty mid cap portfolio, most portfolios will be bleeding. They will not be looking like this right now. And that's why the index probably paints a different picture at certain times, which is not really reflected in the portfolio. This week, capital market stocks led by BSC Limited collapsed. So from 6,000 levels, they've come down. It's come down to 4,600. IT stocks collapsed. TCS, Infosys, Wipro, all going down 8% within a week. Everybody's feeling the jitters that what happens if Trump comes out and says something about H-1B visas on which IT companies are reliant. So there's extreme uncertainty because the president can do anything the next morning. Public sector enterprise stocks, real estate, PSU banks, energy, everything getting demolished 5 to 6%, uh, and so on and so forth. What has been the uh, sort of underlying theme for the last many weeks and months is that banking is not falling as much as the rest of the market. That is the redeeming nature of this fall. Like if we see over a month also, banks and private banks, financial services are still okay. Over 3 months, again, banking is the least damaged. So banking has emerged as sort of the defensive uh, play for this particular fall that we are witnessing. Let's see over 1 year also. The banking here is PSU banks are down quite badly, but overall banking is up 5% for the last 1 year, and private banks are also up 5.2%. So banking is making that kind of a uh, relative movement. You can see it in this sectoral momentum score overview as well, where we rank sectors on a week, month, 3 month, 6 month, 1 year basis, and you can see private banks and overall banks uh, are up while PSU banks are very much down. Financial services stocks like Bajaj Finance, etc., have been the relatively higher strength sectors. Services sector is up. Metals is also not doing badly, and pharma is there. So these are the only few sectors that have really remained unscathed uh, relative to others. See, all this is relative, it is not absolute. So when I say financial services is number one, it does not mean that they have really performed well on absolute basis. Everything may be bleeding, but they may have, uh, you know, outperformed others. Capital market, you can see how over a longer period was doing fantastically well, but has suddenly collapsed here. And so has IT, which over the last 6 months was in seventh place, but has now suddenly collapsed. Defense has stabilized, it seems, in the last few sessions. FMCG is stabilizing. So you can see that, the shift from poor ranks to higher ranks on very short-term basis is signaling that kind of a either a stability or a comeback move for those sectors. Let's look at the trend, if it is improving or declining. So, no prizes for guessing this. The trend is certainly declining and declining badly. uh, 200 DMA stocks, only 10% stocks are now 200 DMA or above out of the top 500 stocks. So 50 stocks are left with, 200 DMA. And being 200 DMA may not mean that the stocks are, uptrending or anything like that. It is just one measure that, they have not yet collapsed fully. uh, the 50 DMA figure is 7%, so only 50 stocks above the 50-day moving average. Very, very poor figures. We had these figures, better figures before, uh, this fall started. Sorry, the rise started last year. If we go back to those figures, I mean, those figures were better than this. So we're really having a bad time on this one. Benchmark indices trend check. If we see, again, you can see only 10 to 15, 17, 26% stocks above 200 DMA in different benchmarks, which is pathetically low actually. So if you see Nifty next 50, only six stocks are above 200 DMA. Everything else is below. On the 50 DMA, again, six stocks are above 50 DMA. So this is very, very weak outcome. Small caps, only 8% stocks are above 50 DMA. If we go even smaller, then also even on a very short term basis, 20 DMA also hardly, a third or one fourth of the stocks are above that. So very, very poor outcomes here from a trend perspective on the benchmark indices. Within the sectors, again, you'll find um, most sectors, real estate, energy, PSC, oil and gas, PSU, banks, auto, have no stock above 200 DMA. So these are completely demolished. And even the others, maybe till private bank or pharma onwards, pharma, metals, commodities, have only 10 to 15%, 20% uh, above 200 moving average. And financial services, one place where 40% is there, but 40% is also not such a great figure. So the entire market is bleeding very, very badly. Even 50-day moving average, only 35% of financial services stock are above 50-day moving average only. Private banks are 30%. So very, very difficult to find stocks that, are looking up or are not damaged in a very big way. And this is telling you the strength and weakness within the CNX 500. Absolute weakness where price is lower than 25-day moving average, which is lower than 50-day moving average, which is lower than 200-day moving average. That condition, 321 stocks out of 500 is satisfying, which is extremely weak, absolute weakness. And death cross is also there, where 50-day moving average moves below 200 DMA for 77% of stocks. Only eight stocks have absolute strength, where price is greater than 25 DMA, 50 and 200 DMA. Only 2% of the 500 stocks. And only 23% stocks are still with the golden cross, where 50-day moving average is above 200-day moving average. So very, very uh, discouraging stats on that front. FII's big sell last day of the week, 11,000 crores sell, and that is why we saw that, complete waterfall kind of a day. Um Sometimes, I mean, if one wants to look at some you know optimism within this disaster, then usually some big selling days are the ones which sort of create some intermediate bottoms at least. So hopefully, yesterday was one such big selling day which capitulated some of the fence sitters or sellers, and they just came and sold lock, stock and barrel. And my feeling is that some funds actually probably are getting out as a country specific exit. DII is 12,000 crores. So the gladiators of domestic funds have not given up yet, which is the best news. But despite all their efforts, the market cannot be, stabilized at the current level. But at least this counter force is available, And if this was not there, I mean, we'll be getting butchered like nobody's business. Already are, but maybe we can't imagine that kind of a situation. See, the fall in the markets, while painful, has been reasonably orderly this time. You're not seeing, at least in the top 500 stocks, 20% circuits or any margin based panic. All that is not happening because it is happening gradually but consistently. uh, and that probably is also a reason why the domestic numbers are showing up almost equal, in fact more than the FII sales. That this number is actually doing the contra move and preventing huge short term panic days, although it's not helping the portfolio at all. So 77,000 crores in the last 1 month by DIIs to counter 72,000 crores. Yet we are down uh, on a monthly basis by a big amount. Uh, I would I would think that at least I would like to stay optimistic that we are uh, possibly near some intermediate bottom. See, I'll give you some thought process on this. If you're following a particular style of investing strategy, value, momentum, whatever it may be, you're doing your thing, right? I mean, you are following what you're supposed to do. Now, on a day-to-day basis, if the market is falling, you don't want to go and worry about it, because it won't make any difference. What it will do is, you'll when you will overthink something, you will basically go astray from your path that you were supposed to take, because the panic will overtake your mind, and you will and it may tell you that no, let's prevent this next 10% 20% fall. Upside we will see when it comes. Usually what happens is that people will do that. They will get out of the market, they will panic sell, and once the market does start to go up, and it will start to go up, if last 30 years that I've been in the market have taught me one thing, and that is basically that markets are cyclical. Markets, at least Indian market, with the underlying growth, always comes back. So the only need is that we are able to pass this time, just like you have to pass the night somehow to get to the dawn. So this night has to be passed, and if you are able to pass this night without panic, without stress, I think that will be the sign of your understanding and your maturity of your presence in the market. That yes, you have understood the market, that from time to time the market will give you this pain, but at the end of the day, if you are able to beat the inflation, if you are able to beat even the benchmark, for instance, you would have achieved your purpose. So thank you so much. Don't worry too much and try to enjoy your weekend. And I'll see you on next week. Thanks. Bye.